Distinguished members, ladies and gentlemen, good afternoon. I rise on a matter of personal and collective privilege to pitch once again on a cause my father, the late Congressman Tet Garcia, had resolutely waged and which I have now embraced as a continuing crusade. I refer, Mr. Speaker, to his staunch opposition of the loophole-laden value-added tax system and his determined push for a shift to a sales tax system, which I initially narrated in this August chamber last September 24. As a 5-term congressman spread over a period of 3 decades, commencing in 1987, Cong Tet never relented on this advocacy, picking up where he left off. Let me articulate on the following points. He highlighted 3 weaknesses of VAT, namely input tax deduction loophole, poor collection efficiency, high administrative cost, and compared it to the strengths of his proposed sales tax system, which, number 1, eliminates the input tax deduction loophole, thereby increasing collection efficiency. Lower tax rate means lower tax passed on to consumers. All taxes paid are remitted to the government and easier to administer, thus lower costs to government. The loophole of the input tax deduction mechanism continue to wreak havoc and negate efforts to improve collection efficiency. I still vividly recall my father repeatedly underscoring that under VAT, there is no limit to the input tax credits that sellers of goods and services can claim and deduct from the 12% output tax they collect from customers. Said input tax can go beyond the 12% output tax, and in which case, the excess can be carried over and deducted from output taxes of succeeding quarters until fully utilized or refunded in the case of exporters. While he observed this with a grain of prophecy or in anticipation of a clearly foreseeable loophole in the input tax deduction mechanism, the summary of VAT returns for the past 12 years now speak volumes of the loophole he entirely pursued to eliminate. The same records also show that by and large, taxpayers reported input taxes tremendously higher by 47% than output taxes as of 2019. To put these numbers in proper perspective, let me briefly dwell on some fundamentals about the VAT. The VAT is an indirect tax which may be shifted or passed on to the consumer. In a typical cycle of goods from production to consumption, the VAT payable to the government may be computed as follows. Sa nakikita nating table, ang isang producer ng tela, halimbawa nakagawa ng isang perasong tela sa halagang 100 pesos, ipagbibili niya ito sa presyong 112 pesos dahil sa patong na 12 pesos para sa VAT. Ang tela ay nabili ng isang manufacturer at ginawa itong t-shirt na may presyong 200 pesos. Ipagbibili niya ito sa distributor pero sa presyong 224 pesos dahil sa kailangan magpatong ng 24 pesos bilang VAT na 12%. Ipapasa ng distributor ang t-shirt sa isang retailer sa presyong 300 pesos na magiging 336 pesos dahil sa 12% VAT. Para sa consumer na bibili at magsusuot ng t-shirt, ang presyo ng retailer ay 400 pesos na magiging 448 pesos dahil sa 12% VAT na lumalabas na 48 pesos. Sa sistemang ito ng VAT, makikita ang buwis na dapat papasok sa kaban ng bayan kahit pa may mga deduction ng input taxes. It is possible, however, that at the level of a taxpayer, the input tax could exceed the output tax in a given period. This occurs, for example, when in a given quarter, a taxpayer sells goods less than what it produced. The VAT implication of this scenario may be illustrated as follows. Sa halimbawang ito, kapansin-pansin na ang distributor na bumili ng t-shirts mula sa manufacturer sa halagang 800 pesos ay nakabenta lamang ng halagang 300 pesos. Dahil dito, magiging mas malaki ang ire-report niyang input kesa output sa BAR. Gayunpaman, sa kabuuan, hindi pa rin hihigit ang input tax sa output tax pagdating sa BAR dahil ang input tax na ire-report niya ay may katumbas na output tax na dapat bayaran ng manufacturer. Kahit sa pagkakataong walang nabenta ang distributor at puro input tax lamang sa halagang 96 pesos ang ire-report sa BAR, sa kabuuan, magiging pantay lamang ito sa output tax na dapat bayaran ng producer at ng manufacturer. Sa makatuwid, kapag ang lahat ng output tax at input tax ay galing sa mga lehitimong transaksyon ay tama at inire-report ng taxpayers, wala dapat pagkakataon na ang kabuuang halaga ng input tax na nakareport sa BIR ay hihigit sa kabuuang output tax. What I am driving at, Mr. Speaker, is that the BIR data showing total input tax perennially exceeding the total output tax from 2008 to 2019 at an increasing rate from 25% to 47% is disturbing, to say the least. Even if we try to subtract the total amount of VAT collections from the Bureau of Customs, assuming these are all reported as input taxes, for example, in 2019, BOC VAT collection amounted to 426.7 billion, the excess input tax will still be 497.95 billion, given the output tax is only 1.986 trillion. This means that the excess of input tax over the output tax every year constitutes an applicable deduction in favor of taxpayers. The BAR's record showing input tax significantly exceeding the output VAT for the past 12 years unquestionably demonstrate the adverse effects of the nagging loopholes that beset our VAT system. These loopholes emanate from the inherently complexity of the VAT system, particularly its deceitful input tax mechanism and the difficulty of administering and monitoring the same. These challenges embolden tax cheats to resort to a combination of schemes in order to lessen or totally eliminate their tax liabilities. The schemes could involve underreporting of sales or over-reporting of inputs through the use of spurious receipts or receipts issued by fly-by-night companies. The BIR disclosed that the effective collection rate of the 12% VAT for the past 12 years ranged only from 2.8% to 3.1%. In other words, while the 12% VAT passed on to the consumers is dutifully paid by the latter, an average of only 3% is being collected out of the 12% VAT. This translates to a collection efficiency of only 25%. Furthermore, if we compare our efficiency with other ASEAN countries in 2015, Cambodia and Laos VAT rate is only 10%, yet the efficiency rate is at 40% and 38% respectively. Thailand, which only imposes 7% VAT rate, has a significantly better efficiency rate of 68%. The BIR records also disclose that on the average, only 1% of the VAT-registered taxpayers are randomly audited to validate the allowable input taxes that were deducted from their output taxes. The BIR blames this low validation rate to the inadequacy of their manpower and resources. This reminds me again, Mr. Speaker, of the arguments articulated against the VAT. One columnist wrote that the VAT expands the venue for corruption and tax evasion. In this regime, a manufacturer can easily cheat by fabricating spurious purchase invoices to increase his tax credits, thus reducing his tax liability to the government. Since the country's tax administration is weak, the BIR cannot monitor the use of these invoices, which nullifies the self-policying mechanism of VAT. Another columnist noted that even the mighty US stepped back from the daunting task of VAT administration. The United States itself had rejected VAT mainly because it entails huge spending for new equipment and additional tax personnel, while leaving a proportionately small net tax collection and so much confusion. On the other hand, by shifting to a simple sales tax, we will be able to achieve at least 4 beneficial reforms. First, we do away with the tax loopholes and tremendously increase internal revenue tax by pegging a tax rate much lower than 12% VAT. Using the record of output tax reported for the past 12 years, the total gross sales and the estimated tax collection for the same period using a sales tax of 4% may be calculated as follows. Based on the above calculations, the significantly reduced sales tax of 4% could have generated 5 trillion or 57% more compared to the actual BIR VAT collection of 3.18 trillion. Second, with the lower tax rate, we also appreciably reduce the tax which consumers pay on goods and services. This is demonstrated by the following comparison, where in the previous slide, the VAT ultimately passed on to the consumer amounting to 48 pesos is 20% higher compared to the sales tax of 40 pesos. Third, by going gross, all the taxes we pay go to the government's coffers. This is unlike VAT in the preceding comparison, where although the VAT amounted to 120, only 48 is payable to the government because of the input tax deduction mechanism, which I intimately early on is laden with loopholes. Fourth, the gross tax system is relatively easier and simpler to monitor and administer. This undoubtedly reduces the cost of administration. Given all the foregoing advantages, the simplicity of the sales tax system over the VAT system is indisputable. The imperative of making the shift and abandoning altogether the VAT system obviously requires nothing much to ponder. Mr. Speaker, with no less than the President pushing for gross taxation in order to plug the huge tax leakage, curb corruption, and improve collection, now is the time to make the shift. In due time, I will be filing a measure proposing to replace the VAT and imposing instead a straightforward sales tax, amending for that purpose the National Internal Revenue Code. Thank you, Mr. Speaker, distinguished members, for your attention.